Most people know about checking accounts and savings accounts, but what about money market accounts? Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. I'm Andrew Shear, and if you're here, you're probably wondering about money market accounts. If that's the case, then you're in the right place. I'm about to explain what a money market account is, how it's different than checking and savings accounts, and why you might want to consider opening one if you haven't already. If that's exactly what you came here for, then give this video a thumbs up. And if you're new here, hit that subscribe button too. You're about to learn something new about money. A money market account is like if a checking account and a savings account got married and had a baby. It's a lot like a savings account. It earns a little bit of interest and is limited to 6 transactions per month. But it's also a lot like a checking account. You can use a check or debit card to conduct those 6 transactions. You can open a money market account at just about any bank or credit union, whether it's brick and mortar or online only. But the reasons for doing so depend on your particular bank. Money market accounts have traditionally earned a little bit more interest than traditional savings accounts. That's because the interest rates they pay are based on the current interest rates in actual money markets. In the world of finance, these are the interest rates that come with short-term loans. So at this point, you may be wondering, if money market accounts pay more interest, then what's the point of regular savings accounts? The answer has to do with minimum balance requirements. Money market accounts first came about in 1982. And when they did, the minimum balance for these accounts was $2,500. Not everyone keeps that kind of money in the bank, so if you didn't have $2,500, you still had your savings account, with low or no minimum balance required. At many brick and mortar banks and credit unions, minimum balances are still a thing with money market accounts. And a lot of times, you'll see this tiered system of different interest rates you can qualify for based on the amount of cash you keep in the account. The more money you leave in there, the higher interest rate you get, and the more interest you earn. Certain online banks like Discover and Ally have eliminated the minimum balance requirements, but they've also cut the interest rates to about the same or maybe a little bit less than their standard savings accounts. So you wind up with a choice between a few extra bucks in interest with a savings account, or the ability to write checks and use a debit card with a money market account. Every financial institution seems to have a unique set of rules when it comes to money market accounts, so you'll need to check what the rules are at yours. If you already use your checking account to write checks and make debit card purchases, you might be better off sticking with a standard savings account depending on the interest rate. I would suggest taking a look at a money market account at your bank or credit union as a place to stash your emergency fund. Chances are you'll do a little bit better on the interest rate, especially when you've got it fully funded and there's $10,000 or $15,000 in there. That money can chill out and earn $5 or $10 per month in interest. Because it's not in your checking account, you can avoid the temptation to spend it. And when you've got an emergency on your hands, that money is very liquid. It can be accessed easily with a check, a cash withdrawal, or a transfer to one of your other accounts. One thing that's important to remember is you're not going to build any substantial amount of wealth based on the bank or type of account you select. The way you're going to build wealth is by making a plan for your money, eliminating your debt, and investing in things that go up in value over time like real estate and index funds. If you asked a wealthy person how much interest they earn on their savings, they probably wouldn't even know the answer. It's not even on their radar. So don't spend too much time jumping between banks or credit unions trying to score the highest interest rate for your savings or money market account. Just pick one that works for you and move on to more important things. Do you have a money market account? What do you use it for? Let me know in the comments. If you're ready to learn how the wealthy make their money, click right here to learn about how compound interest works and how it's calculated. And if you're not already a PPS subscriber, you can change that by clicking right here. Thank you so much for watching. I'm Andrew Shear, and I'll see you next time.